Yeah, thanks very much, Tim. Welcome, everyone. Great to be here today to share a bit of the story around Mighty Craft. We'll be listed 3 years in a month's time. And yeah, it's been a big 3 years coming straight into COVID, and the business has recovered really well and starting to really hit its straps. So perhaps we could just move through to the next page. So we are the fastest growing booze company on the ASX. So a couple of the brands there for you to see. So Better Beer, obviously, which I'll talk about more shortly. 78 Degrees Spirits out of the Adelaide Hills. 7 Seasons, which are an Indigenous back brand. And then some of the other brands over there on the right, but really about simplifying from here on in, really focused with a clear strategy to achieve our ambition in FY25. Next page, please. So yes, we talked about the growth and the diversification of our portfolio. So we are the only listed beverage company on the ASX that does give that exposure to not just beer, cider, RTDs, but also to white spirits and dark spirits, in particular whiskey, which you can see that we're bringing to market now. The Better Beer brand and business has been the biggest beer launch since 2014. It's been huge. Again, more on that later. We're starting to see now a real rebound post-COVID. So some tailwinds around venues and the on-premise, which has been a couple of years in the making. And we're very much a defensive category play. So I think I've done over 25 years in beer and spirits, and definitely beer has been recession-proof through the journey, and certainly proving that that will be the case going forward if we see a downturn in terms of the economy and the pressures that we're seeing at the moment. So really well positioned in terms of going forward. Next page, please. So we have a big ambition. There's no doubt about that, to be one of Australia's leading craft drinks businesses, and to do that across both of those categories with a lot sharper focus now in terms of the priority brands across beer, cider, RTDs, as well as spirits. As to how we do that, next page, please. We I guess have to just flag that we have made a bunch of investments in different businesses and brands since we kicked off 4 years ago. We do move through that investment cycle, as most of you on the call will, whether it's your own portfolios or whether you're managing big businesses yourselves. We're sort of very much in that portfolio management stage now, where we've integrated these different businesses, brought them through, accelerated their growth, really starting to drive to scale now and bring the efficiencies through. But some of those earlier stage businesses we did invest in, probably not going to get to the scale that we thought they may. And as we've got more scale into our business over the last 12 months, starting to see the benefits of that come through and drop through to the bottom line, not just the top line growth. So we are in that portfolio management stage now, where we'll start to cycle out and rationalise the portfolio over the next sort of three months to 18 months. Onto the next page, it does show you our ambition. It's a lofty ambition. You can see there for FY22, we set a fairly aggressive target for ourselves that we did share with the market early in FY22. So 8 million litres of beer, cider, RTDs, 250,000 bottles of spirits for FY22, and then whiskey at 300,000 litres. We achieved all of those numbers. We've now set an ambition for FY23, again, next level of scale up, which will see us very well placed to hit that FY25 ambition. And to give you a sense, a business like Stone & Wood, which is a great beer business out of New South Wales, when that was recently acquired by Lion, they were doing about 17 or 18 million litres in their own right. And it's understood that that was acquired for around 500 million. So it gives you a sense as to the value that we're creating within these businesses that are probably not reflected in terms of our share price currently. On the next page, you can see some of the key businesses that we do have, varying ownership stakes. You will see one of the themes going forward is that we really starting to simplify the portfolio and where we can, take a 100% position in these businesses. So within beer, cider, RTDs, you can see that the 4 key focus brands going forward. Better Beer, obviously the one that's delivering the bulk of that scale. But each of those other brands performing well and growing strongly as we have on a year-to-date basis in FY23 as well. From a spirits perspective, again, varying levels of scale there, but some wonderful brands, highly differentiated, and most of them are 100% owned. So a big ambition, most of them with production facilities of their own, and Better Beer is the exception there, where it's a capital light model, where we produce up at Casella's brewery in Griffith. They do a great job for us, and keeps us, in terms of that business, profitable, capital light, and able to sustain the growth that we're seeing at the moment. Next page, please. Certainly one of our strengths in the market, and this really helped us during COVID, our signature strength really in terms of wholesale, sales and distribution. So what that means is our ability to work really well with the more sophisticated trade in the country, in the off-trade. So whether that's Dan Murphy's, BWS, whether it's Coles, the big independent groups like ALM and IBA, but then in the on-trade as well, ALH and ABC. So we've really grown our distribution points strongly. You can see that trend. Q1 23, again, an uptick again. Real strength there, and our ability to, I guess, on our demand-led business strategy, which is to work with our key customers, help understand what their needs are, what problems they're solving for, and work with them to create a solution to that problem. And a really good example of that is Better Beer, that we sort of co-created with the likes of Dan's and BWS, the two biggest retailers in the country, and the Inspired Unemployed, and the growth of that has been phenomenal. Next page, please. So Better Beer, onto that. It has been a huge launch. So the main product there, of course, is the lager, which is on the left-hand side. So 0 carbs, 0 sugar. So it's a great product with relatively low calories as well per serve. It's a huge addressable market, because this is really entry-level craft. It's disrupting mainstream, and it's basically taking share directly from the big mainstream players. Whether that's Great Northern, whether it's Pure Blonde, Hunt Super Dry, it's taking share from that category, which means it's an enormous growth opportunity in terms of a big addressable market. It's been digitally led in terms of the launch. Inspired Unemployed, Matt and Jack, with Nick Cogger doing all the marketing and driving that. And obviously it's right on trend in terms of that better for you moderation trend that we're seeing as a real key driver of consumption in Australia at the moment. It is the most followed beer brand in the country. So from an Instagram perspective, it's got over 100,000 followers now. So within 12 months of coming to market, has sort of gone ahead of the likes of Stoner Wood and Bolter in terms of the engagement. So the engagement of this brand with the drinkers is just phenomenal. And then the scan sales down the bottom right there really give you an indication that it's scanning on an increased rate as every week goes by. And biggest week of the year was the grand final week, which you can see on the right. So really strong performance in terms of sell-through. It's a brand that's already bigger than Bolter, which sold out for about 200 million. So the value we're creating within this business is huge, and that momentum coming into summer, we expect to see really, really strong performance from this brand. Over the page, just a quick update in relation to the quarterly that we released a few weeks back. So it was a very tough quarter for the category. Overall, the category was down around 6% for Q1. We grew very strongly against that, around 75% in terms of wholesale. So we grew share again, which is a trend in terms of how strongly we're disrupting the market. Our operating cash, the hardest two quarters for us are Q4 and Q1. They're behind us now, so that operating cash, we're starting to see that really come through strongly now through Q2, Q3. We're seeing a very strong rebound out of COVID for the on-premise and our own venues. So, plus 75% versus the same period last year. Strong cash balance, and we're well and truly on track to deliver those volume commitments that I referred to earlier in the slide pack. We did have a record month in October, biggest ever month, and we're on track to beat that again in November. And as you would normally expect, December, January should be significant months as well as we come into that peak trading period. And one of the things that we've really talked about is focus. and there will be some divestments of some of the non-core businesses going forward that will start to free up some of that capital to bring back in and support the growth of our priority brands going forward. Next page, one of the themes you'll hear us talk about more as you see more of our story. Definitely fewer, bigger, better. I think that focus becomes really important to capitalise on the biggest opportunities that we have in front of us. So for us, really driving from here to not just growth, but profitable growth. Done a lot of work on our cost base. We made a bunch of changes at the back end of FY22 that resets our overhead base to start to see operating leverage come through really strongly during the current financial year. The acceleration of better beer and access to export markets now. So we are in New Zealand and just launched over there through DB, who are owned by Heineken, who are taking on the distribution over there. So looking forward to seeing really strong results from better beer, accelerate the spirits portfolio and access export markets for those brands, get our whiskey program really going, and manage our capital carefully, keep working on our divestments where they don't fit that real sort of focus on priority brands at scale. And pleasingly, we're seeing really strong rebound out of COVID, which has been obviously had a huge impact on our business and probably set us back 12 months. Now starting to see those benefits come through of the on-premise channel and our ability to convert consumers in our own venues and do so profitably. So a lot to look forward to, but very much trying to simplify the agenda, Tim, going forward.
Thanks, Mark. You won't believe it, I'm actually on TikTok and I follow the, what are they called? The Inspired Unemployed. I didn't realise I did. And so with a group of two young guys like that who are hysterical, 1.5 million followers, I was just having another look. Do you create a brand around distribution? Is that, in the future, is that part of the strategy to find these big distribution channels and do a deal and create a brand with that?
Yeah, I think certainly with Better Beer, it's a great example of us, again, with our entrepreneurial spirit, looking for the right partners to build different brands. So, working with those boys has been fantastic and certainly a very different way of launching a beer brand. So I think going forward, the opportunity is obviously to keep growing that really strongly, but look at other opportunities potentially to disrupt in other segments, maybe within spirits or the like, with the right partners. And Matt and Jack obviously have equity in the game. They drive it really hard, very creative, very hardworking actually as well. But yeah, very funny guys and fantastic to be working with them. And they do the marketing and the socials. So that's with them. And we do the sales and distribution for them. We have a 7 or 8 year agreement with them to do that. And obviously really hard.
Sorry, my 19-year-old son buys their beer. So does he do that online or does he go to the local bottle-o and pick it up there?
Yeah, go to the local Dan Murphy's or BWS, or you can buy it on tap as well. It's available through the on-premise more broadly. Been really supported well by Dan's and BWS. That's your best spot to find it.
Okay, and there's a question here on your $9 million in sales in October, which is a big number. What was the net operating cash flow for October?
Yeah, look, we're still, obviously finalising the month there, but in terms of from a cash generation, it was very positive. We're starting to see really strong cash generation over Q2, Q3, and into that positive cash generation going forward, which obviously is a big milestone for the business.
And I think you mentioned something about owning your own venues. Did you? Can you give us a bit more colour on that?
Yeah, sure. So against our breweries, we have brew pubs attached to those. So for example, Jetty Road in the Mornington Peninsula has a wonderful brew pub attached to it, which is growing strongly, profitable. Mismatch in Adelaide has a brew pub as well in the CBD, and our distilleries have cellar doors attached to those as well. So very much like Four Pillars has its own cellar door attached to the distillery at Hillsville. We have a wonderful cellar door up at Lot 100 near 78 Degrees, and at Kangaroo Island Spirits as well. So for us in our own venues, I think that's a great attribute to be able to bring consumers into our own experience and for them to really enjoy that and obviously capture them and do that profitably.
And it's a hugely competitive space. I mean, you go to the pub now and there's so many beer choices. Do you think it's almost too competitive? It seems like it's less about taste now, more about brand. Do you see that playing out?
I think what we're seeing is, the premiumisation trend is well and truly alive, Tim. I think people are keen to support local. And that's definitely important to people, and they want to support the backstory of the local brewer or distiller. But yes, there is a lot of choice, and I think the ability to stand out on shelf is important, and hence the ability of our sales and marketing team to do a great job with our biggest customers to make sure our brands are available, firstly, and secondly, stand out. And then if we can market them in a way that's a bit different, like we do with Better Beer, we find that cuts through very well. But yes, it's increasingly competitive, and we probably expect more consolidation going forward rather than less.
Great, Mark. That's all we have time for. There's a couple of questions online, if you don't mind, if you've got the time just to type in some answers, be appreciated.
Great.
Thanks,
Will
Mark.
do. Thank you very much.